Welcome to On with Origence, the podcast where credit union leaders explore the ideas shaping the future of lending and technology. This episode is part of a special series recorded live at Lending Tech Live, Origence's annual lending and technology conference. We brought these sessions to you so the conversations that energize the room don't stay in the room. Let's get into it.
That's right, we're heading back to the On with Origence fancy news desk right over there. By popular demand, Jay Karstens is back as moderator. He's joined by Chris Harper, Director of Business Development at CULA. Thank you again to CULA, our titanium sponsor, for sponsoring this segment you're about to see. Also at the desk is Aleks Bogoeski, Senior Vice President of Product and Partnership at Origence, and Jennifer Warmerdam, Senior Vice President of Consumer Lending at Golden One Credit Union. Together, they're going to go deeper on digital auto buying, financing innovation, and what lenders need to do to stay ahead in an increasingly digital marketplace. Let's give them a round of applause.
Thank you, Fred. I am Jay Karstens, and this is On with Origence, Credit Unions and the Digital Auto Moment. The digital platform discussion on the main stage described a consumer who shops, compares, and expects financing before they ever talk to a dealer. That's your member. The question is whether your credit unions show up in that moment, or whether someone else does. The digital panel described a consumer journey that moves at the speed of a click. Where is the credit union in that journey now, and where are we invisible? Chris, let's start with you. CULA sits at the intersection of credit union lending and dealership transactions. From your vantage point across the credit union relationships, what does showing up digitally actually require?
Thank you, Jay, for the question. And I'll let Aleks and Jennifer talk to the automated underwriting and the digital document aspect. Area where I think credit unions are truly missing out right now is the transparency of their programs to become a true partner with the dealer. We're seeing more and more of this proliferation of online shopping using these digital tools. And to be part of the game, the credit unions have to have their programs surfaced to the dealers so that they can actually advertise and leverage those programs easily. One of the things we do at CULA is ensure the transparency of the program through the dealer desking tools so the GMs and sales managers can actually leverage those tools easily and use that as a key differentiator in the marketplace to capture business.
Thank you, Chris. Jennifer, Golden One's a tech-forward credit union. When you watch a panel like the one we just heard and think about your members' online auto shopping journey, what's the part of your current experience that you excel at, and where do you still maybe fall a little short?
I think that something that became apparently clear with this panel and the panel before is we have to meet members where they are, and we have to be fast. And so when it comes to quick decisioning and those type of things, we've done a lot in that space to really make sure that we're there at the point of decision and we can be there quickly. I think e-contracting is huge and it's going to be a big part of us moving forward. I think that's a great opportunity for us and other credit unions to grow into with our partnership with Origence, but it's going to be something that we have to do to stay relevant. So it's kind of twofold. One, we're meeting our members where they are in the embedded space, but then when we're working with the dealerships, we also have to figure out what our partners need in order to choose us. And so listening to the panels today, it brings a lot forward to say, okay, when we're building our roadmaps and what we need to do to be relevant, to be part of this ever-evolving ecosystem, what do we need to do? And I think that the things that we need to focus on are listening to what our partners need, but also making sure that we're there for our members with our products and services, and we're in that financial transaction at the point of making the decision.
Perfect, thank you. Aleks, Origence sits at the center of the credit union lending tech stack. What does our platform data and partnership network tell us about where credit unions are in the digital auto journey right now? And where are the biggest capability gaps that you're actively working to close?
That's a loaded question, Jay. Let's talk about speed. So if we talk about what the recipe is for success, number one, we heard from the dealers, we heard from this panel, you have to be fast, that's in decisioning, and that's just table stakes. So making sure you're in fighting shape. I think I'm gonna go back to Charlie from Security Service. He said they're at 60 or 70%. I think on average, we're seeing credit unions being under 30% in auto decisioning on the platform. So if you're not at 60 or 70 today, I think the tools are available to you, the processes are there. I think it's just a matter of getting it done. I think the most important thing though is presence. being present where the decisions are being made. 92% of shoppers are doing something online before they enter a dealership. 50% of a dealer shoppers complete a portion of the transaction online on the dealer's website or via some other process. So being present where that's happening, where those decisions are being made, is really important. So for the last 24 months at Origence, we've created this project, we call it, it's an initiative, but it's embedded financing. And that's a combination of building out APIs or connectivity to allow our lenders to be present in any marketplace, whether that's Amazon, a Costco, a Cars.com, you name it. We have the technology to bring you to the table. We need you guys to have the offers and the programs to be competitive. And then the one thing you do have, and I believe credit unions have that's a competitive advantage, is trust. Members trust you. If you look at the last America Credit Union Association survey they did, your trust factor from consumers is at 76% versus, I think banks, it's at 56%. So when you are competing head-to-head on these platforms with competitive rates, I think the trust factor is already going to be there. So I think those are the key elements. And we're bringing the technology, and then we're also finding ways to make sure that you're present there from an Origin standpoint.
And so we'll build off this. The panelists talked about embedded finance and instant decisions at the moment of purchase intent. What does a credit union need to do to build or buy? So Aleks, let's start with you. Origence connects the LOS to broader digital ecosystems. What does real-time embedded auto financing actually require at the platform architectural level, and how close are credit unions on our platform to delivering that today?
Every platform does something a little bit different. So we've built out technology that basically allows us to connect to any one of them. So we've got that side of it covered for the most part. I'd say be prepared, get involved when the opportunities are there to participate. Yeah, the volumes are not high on Amazon right now. I have a vehicle sitting in my shopping cart as well because I've been exploring and playing with it. But at some point, that will become a bigger channel. So I think experiment, don't be afraid to participate. The world is changing. So we've got the connectivity side there. I think the biggest aspect is going back and reevaluating the friction that you have in your process, whether it's at the dealer point of sale or online. Reduce the friction, whether that's reducing stipulations that you're asking for or just auto decline for the dealer. That would go a long way. But get that speed up to par. You heard the dealers earlier, their expectation is under a minute. And online, it's even faster.
So Jennifer, how do you see this? Golden One's leaning into this. Is this a technology problem? Is it a data problem? Is it a risk appetite problem? Combination of the three? Something else?
I don't see it as a problem. I think it's an opportunity. Ultimately, it's finding the right partners. And as credit unions, you can't take 80 credit unions to Amazon and say, each one of us want to have a partnership with you. And so finding a partner like Origence through FI Connect and being able to have this aggregated platform is really something that empowers credit unions. And so we're really leaning into that. And when the opportunities come up, we're taking them. It is part of our growth strategy. It is part of our strategy to meet members where they are, because if we aren't, somebody else is. And it's really important for us to ensure that we're there for our members. We also have opportunities to get new members through these channels, right? And through that, bring them into our ecosystem and have them become valued members of our credit union. So I think there's a lot of opportunity, but for me, the way I look at it is finding the right partner, like Aleks said, being available when the opportunities come up, being open in this constant evolution of it's not always going to look the same. We are very much in this indirect space where it's always the same. We have to be very flexible, especially when it comes to these embedded relationships that do come up very quickly, and figure out how we can be flexible, just like the dealer said, being flexible to making it work. And I think we have to do that with our dealer programs as well, looking at it from that same perspective.
Thank you, and I like the way that you said it's not a problem, it's an opportunity, right? So the main stage highlighted affordability and flexible ownership models as a growing piece of the digital auto journey. Leasing happens to address both of those. Most credit unions don't offer leasing. Is that a competitive disadvantage? And if so, what do we need to do to fix it? Chris, CULA obviously exists specifically to solve this problem. What are your thoughts?
We do, and I think for many credit unions, it is a missing the mark by not looking at it as a solution to drive more volume. We're seeing a proliferation of growth among the millennials and the Gen Zs in particular as leasing as their primary solution to get their next vehicle. Millennials 3 times more likely as previous generations, Gen Z's 5 times more likely to lease versus there. And it all comes back to that affordability issue. Costs are rising. We all saw the price of vehicles now over $50,000, but a lease payment on average, according to the latest data, is at least $151 better than a applicable 72-month loan. So you're seeing this savings, and that's meaningful savings. And we find when we have our credit union partners with the rates they're able to offer, it's actually even more impactful, closer to $180 difference in payment. So you're looking at these significant ways to offer savings, and that's really what's driving this next generation of consumer. We heard it on both panels talk about that next generation of consumer and how they're coming into the place. So not having a way to meet them where they are, as Jennifer mentioned, is going to put you at a little bit behind the curve. Ownership has gone away versus use of a vehicle. They're seeing this change in the marketplace. And so having a program that allows you to compete on that space is going to become more and more impactful going forward.
And we've heard the last couple of days that it's not just the car payment that's causing the problem, it's also the insurance payment that goes along with it, right? So being able to reduce that by $150 to $180 helps them with the total package for the new purchase. So Jennifer, has Golden One felt the pressure on the leasing gap? And how are you responding to members when they want a lower payment?
In California, which is where we are, leasing makes up 46% of the transactions. So that's a very significant number. So it is relevant in our market, very relevant, and something that we're absolutely looking into because it is also ensuring that we're providing what our members need. But we've also looked at other things, and we've also explored other areas of figuring out how we can bring value to make it more affordable, extended terms, things of that nature. We are, in our market, very big in extended terms, and I would say forefront in a lot of our areas because affordability is such a challenge in California. That's right now our solution for our members, but ultimately, I do think leasing is a really important part of the conversation, and as we continue to see it growing in California, it's even more of a relevant part of the conversation.
Thank you. And Alex, let's just switch it up a little bit. The digital auto panel talked about the frictionless consumer journey, but credit unions have historically been built on relationships. How do you deliver both, instant and personal, without losing what makes you different?
If we kind of think about what's happening in the last 5 years, and it's going to get even more transparent with AI, it's information asymmetry. So one side of the transaction had a lot more information than the other. That's changed. Now you have transparency really fast, and consumers' expectations are going to be, again, you have to be competitive, but I think they also trust credit unions more. So I think communicating and being there at the time of decision, saying, hey, we're here, we're available, we're a trusted source for your financing, but you also have to cover all the other aspects that are just table stakes, speed, frictionless. So I think having the technology and being able to compete, as some of the other panelists said earlier, is table stakes. I think your niche and the thing that gives you the differentiation is going to be that bond that you have with your members and that communication and that guidance to tell them, hey, we've got you when you're going to go and buy a car, or whether that's a house or getting a HELOC, and then having the tools to support them along those journeys. So I know that sounds a little cliche, but when you get into a world where, like you think about from economics class when we were in college, when you get into a perfectly competitive marketplace, pricing isn't necessarily the differentiator. It's all the other factors that play into it, because everybody knows everybody's price at some point, so they can adjust. So yeah, I think it's going to be that trust factor and how people feel about conducting business with their credit unions.
Thank you. Time goes quick. We just have a little bit left. So let's do a rapid fire here at the end. Quick response from each of the three of you, please. In 3 years, what does the credit union's role in digital auto transactions look like? Stronger, smaller, or fundamentally different? Jennifer?
I think fundamentally different, but ultimately stronger. I think that everybody's very aware that you have to evolve and that we have to be focused on the speed and removing the friction and being a strong partner and meeting our members where they are. So I think it will evolve to that. And then those that don't won't be part of that change. But I think the credit unions that focus on those areas are going to end up ultimately being stronger in the market.
Chris?
I will say stronger without a doubt. I think the beauty of what's going on in today's marketplace, and it's folks like Origins who built the tools to enable credit unions to inject into this space. Back in the day where you had to kind of create things on your own or figure it out or find multiple partners from multiple places, it's now aggregated where you can easily plug yourself into, providing these solutions that are, as Alex said, table stakes to be at the game. And I think because of that, that ease is going to make it something that's going to make the industry stronger.
Thanks, Chris. Alex?
I see consolidation increasing, and that'll result in stronger for some. Obviously, others will get folded in, and I think that we heard that earlier as well. But yeah, eventually, all roads lead to some winners and then some losers, but eventually I think the industry as a whole will be stronger.
Thank you. The main stage panel showed us where the consumer already is. They're online, they're comparing, they're expecting a financing answer before they ever step into a showroom. What this conversation showed us is that credit unions have everything they need to win that moment. The trust, the rates, and increasingly the technology. The gap isn't the brand, the gap is the build. The credit unions who close it fastest will own the digital auto relationship for the next decade. Leave today with one comment to your team. Find the moment in your members' digital auto journey where you're not yet. Then fix it. Thank you, Chris, Jennifer, and Alex, and to our titanium sponsor, CULA. Please connect with them and with the Origence team in the exhibit hall. Have a great lunch.
That's a wrap on this episode of On with Origence. There are more conversations from Lending Tech Live in this series. Find them wherever you listen and subscribe so you don't miss one. Thanks for tuning in.